what does financial freedom actually mean for an average Pakistani?
Yeah, it's a very interesting question because there's a lot of noise around this. There's terms like FIRE, retiring very early, retiring by 30, retiring by 35, retiring by 40. So a lot of people get these views from Instagram, from certain posts on LinkedIn. What happens is they equate financial freedom with retiring as early as possible. But financial freedom should not be freedom from a job or from a pursuit or from effort. Financial freedom should, correctly in my experience, be about the ability to absorb life and not panic. So, when life hits you, moments of joy, moments of sorrow, all of those you are ready for, and the financial aspects of your life are all set in sort of place. So you can absorb those hits without panicking. So to be in the best possible position to take the right decisions, it's only possible if you have a certain buffer that you've built, and that comes from something called an emergency fund. So the number one thing would be an emergency fund. The second would be training myself or being trained in utilizing the financial instruments that I am surrounded with, whether it's banks, it's stocks, it's gold, it's mutual funds, whatever it is, bit by bit, you must have some sort of literacy on that.
Where do you think AI is adding value? And with so much information or misinformation, how should I, as a consumer, how will I know the difference that this is adding real value to me, this piece of information is adding real value, or what AI is advising me, is that adding real value, or is it all just marketing fluff, as they call it? So how will I know the difference? What are the sort of indicators that I should be looking for?
Yeah, so I think as a consumer, the onus lies more on the financial institution. If that financial institution has in its ethos, in its DNA, weaved into this fabric where they build solutions keeping the consumer in mind, they'll understand which ones of them actually need these chatbots, which ones of them require actually a service that requires voice, which of them actually requires financial guidance, which requires a human in the loop.
Good afternoon and welcome to yet another exciting episode of JBS Stories of Innovation. Today we'll be talking about money. Money made simple, and how we can use AI, fintech, and look at your financial future in Pakistan. We'll cut through the noise about budgeting, about apps, about fintech, and how you can create smarter habits and use smarter tools. So today I'm joined by Sennen. Sennen is with Hisab Kitab, which is the financial wing of JBS. So Sennen is a Fulbright scholar. He has deep curiosity of the financial ecosystem. He's a startup specialist into global VCs, etc. So welcome, Sennen, to our podcast. And before we delve more into the details of it, tell me a bit about yourself and why you got into the financial sector.
Thank you so much for having me, Sajida. So I am currently head of business and global alliances at Hisab Kitab. Previously, I still am co-founder to a company also called Investors Lounge. What we do is we use gamification, content, and stock market intelligence to teach people how to invest intelligently in Pakistan stock markets. That's primarily been by my focus area over the past 6 and 7 years. So in delving into stock market training, using different methodologies, using different pedagogies, learning how to really build a culture of smart investing habits. That's been my forte. Also capital markets infrastructure. It's been fantastic joining JBS over the past, I think, 7 months, getting very quickly adjusted into banking, and how I can take my experience of quick experiments about problem solving and bring that into legacy sort of builders, legacy operators, and trying to turn things around. So it's been very fascinating working not only in Pakistan but also in the GCC region. So yeah, that's like a recap of where I am right now.
No, really good to have you because you've been such an asset in the financial field. So I just want to start with the basics. What does financial freedom actually mean for an average Pakistani?
Yeah. It's a very interesting question because there's a lot of noise around this. There's terms like FIRE, retiring very early, retiring by 30, retiring by 35, retiring by 40. So a lot of people get these views from Instagram, from certain posts on LinkedIn. What happens is they equate financial freedom with retiring as early as possible. But financial freedom should not be freedom from a job or from a pursuit or from effort. Financial freedom should, correctly in my experience, be about the ability to absorb life and not panic. So, when life hits you, moments of joy, moments of sorrow, all of those you are ready for, and the financial aspects of your life are all set in sort of place. So you can absorb those hits without panicking. So that is where
I think that's a very important point, without panicking. Because what I've noticed is that people get very overwhelmed when they talk about money. I think if we look at our parents and our grandparents, from what I can remember, they were earning much less, but they seemed a lot more happier.
Yeah.
Today, people seem really overwhelmed. Let's cut through that.
So I think there's two aspects to it. One, I feel, is just decision fatigue. Things were technically a lot more simpler. There was less cognitive load in their time. Now you have multiple bank accounts. They probably have one bank account or a khata or whatever you would like to call it. But now you have multiple bank accounts, multiple credit cards, one BNPL account, one mobile wallet, multiple subscriptions. So when everything is so spread out, the amount of decision fatigue on an individual is much higher. Secondly, we are now more connected with the outside world. First, it was more about my cousins, a couple of friends that I would ring a bell and call out to play cricket, and that was my exposure from 5 to 7 in the evening. Now at 24/7, I have the stimulus throughout the day where I am comparing myself against the clothes people are wearing, the vacations that they're taking, the concerts that they're going through, the cars that they have, and that subconsciously takes a toll on you. So you have to go back and see what worked in their time. What worked in their time was making life as simple as possible. I think that is my key personal takeaway, and which means reduce the amount of options that you have and reduce them only to the most smart, most intelligent options that you require. The second is onus on people like us who work with financial institutions to say, listen, you cannot be just a bank, just a financial institution, just an asset management or whatever. You have to bring all of these services together because you're taking care of somebody's financial life. So those services have to be blended into that person's life. The third is the onus on the individual. When you are fulfilled, when you take a sense of accomplishment from all that you've done, and you understand that it's not a race every day to compete against, and you don't want buy-in from a table where you're not comfortable in, those are things that only an individual can take a decision on. Those things have to come together to make you less anxious, to make you smarter about money, and to make you more successful.
So for someone like me, you get so much advice from very smart people, from very smart sources. It's difficult to make that advice stick.
Yeah.
Even though I think I know what I want to do, I'm very good with my finances, but just if I talk about an average common person, it's very difficult for them to actually really stick to what advice has been given to them. Where do you think where does that problem lie?
So I think that problem lies in two things: delivery and placement. I'm very, very happy that over the past 3.5 years, what I've seen in my career, these conversations are happening a lot more frequently. And so better insights will come in play. But what happens when you have an insight on the 11th of October, but life gets hard on the 29th of December? So if my mom suddenly falls ill on the 29th of December, I might not be able to recall the advice or a podcast that I heard on the 11th of October. So what needs to happen is, as much as you can hit people with more insights, better content, advice, guidance needs to pop up at a time where I really need it. Because I will be under a certain amount of stress. My brain has not naturally evolved to pocket from or pull from an advice I might have heard 2 years ago. So when I have those times, if I am well taken care of in those times, and if advice pops up at that time, that is when I can, with the right context, with the right advice, I will be able to make the right decision. And I think that is what people like me at JBS as a whole is working with financial institutions.
I think that's a very, very important point, Sennen, because advice at the right time.
Yeah.
But where do you think people go wrong and make mistakes? And,
I've spoken to 16-year-olds, I've spoken to 27-year-olds, I've spoken to 40-year-olds, and I've spoken to everybody in different sort of demographics and differences in income. I'm very surprised. Everybody seems to believe that life will take care of itself, which is fine. And you must have that faith from life. But then you have a part to play in taking care of yourself as well, right? So the number one thing I feel happens is as simple as people do not have an emergency fund. People do not build a 6 to 8 month buffer. We speak so much about AI. AI is going to cause certain structural changes, which means you might have to change jobs. You might be, there's a bit of anxiety around that. Are you prepared to be okay with looking for something else? And do you have a cushion for 6 months if you get, if there's right sizing in your organization? So people need to really start thinking in that, right? So I remember, and this is a personal example, when it came to my own mother and when she was diagnosed, there is a lot of stress from all ends. Everybody's just taken aback by the news itself, right? If I did not have the right insurance, if I did not have that kind of buffer, I would be hard pressed to take very tough decisions that might have not been right for the situation. To be in the best possible position to take the right decisions, it's only possible if you have a certain buffer that you've built, and that comes from something called an emergency fund. So the number one thing would be an emergency fund. The second would be training myself or being trained in utilizing the instruments, the financial instruments that I am surrounded with, whether it's banks, it's stocks, it's gold, it's mutual funds, whatever it is, bit by bit, you must have some sort of literacy on that. Till you don't have that, you will find everything intimidating. Everything intimidating, it comes from a position of not being educated on it. So I think those two things, and the third, I think, comes from not starting off early. I think we always believe once we hit a certain level of income, that is where finances really come in. And it couldn't be further from the truth. You should and you could start from the age of 16. And I feel every market is now opening up to younger and younger people. So,
I wish I had that advice when I was younger, because now I give this advice to my younger sort of nieces and nephews. But I wish somebody had given me that advice while I was young. But let's zoom out a bit, Sennen. The globally, banks and financial institutions, the advice that they've been giving people, do you think they have a role to play in disinformation or even misinformation around how people should manage their finances?
In my experience, I graduated from IB in 2013, I think, in finance. I did my master's years later. Since then, I've had a look at the financial markets in Pakistan. I'll speak about Pakistan and then regionally as well. The misalignment, when you have somebody who's an advisor, but the incentive at play or the incentive that that person has to sell, then it is misaligned with, if I come up to Sajida and I know Sajida has a certain income and I've gotten that information out of Sajida and I am an advisor / salesman, right? What will I do? I will try and sell to Sajida not based on Sajida's preferences, on Sajida's risk profile, on Sajida's best possible outcome in 10 years. What I will try and sell is, what is the insurance that fetches me the highest commission? What stocks can I get her to trade based on misinformation so that I earn the highest amount of commission? And that's rampant, right? Which is why when we flip the equation, I put the onus now more on young people to gather that information so that if you are able to ask the right questions, then it is very difficult to be fooled. Then a third aspect is technology. Once you deploy technology inside applications like banking applications, you understand banks have enough data to understand your transactions and learn from them 24/7. Then it's very difficult to not give out in terms of output the best possible advice at the right time.
Which brings me straight into what I want to discuss next, and that's about AI. Very, very important these days across every sector. But let's talk about personal finances. Where do you think AI is adding value? And with so much information or misinformation, how should I, as a consumer, how will I know the difference that this is adding real value to me, this piece of information is adding real value, or what AI is advising me, is that adding real value, or is it all just marketing fluff, as they call it? So how will I know the difference? What are the sort of indicators that I should be looking for?
Yeah, so I think as a consumer, it's more, the onus lies more on the financial institution. If that financial institution has in its ethos, in its DNA, weaved into this fabric where they build solutions keeping the consumer in mind, they'll understand which ones of them actually need these chatbots, which ones of them require actually a service that requires voice, which of them actually requires financial guidance, which requires a human in the loop. You know, because everybody I hear, AI is the trend that you see catching on. Everybody wants to do something in AI. Again, it's always a case of incentives being misaligned. Sometimes people just want to do AI for the sake of AI. That will not make sense. For consumers, I think the best possible thing that can happen is when they find applications. So what you can do is, if you've done some bit of introspection, if you've done some bit of financial planning on your own, and when you have an AI that generates a particular answer, when you cross and compare both, you'll be able to get a sense of, is this something that is absolute fluff, or is this something that adds on real value based on what I already have? And these are three blind spots that I wasn't able to look at. So the more personalized it is, the more it's able to check my leakages and identify leakages. Listen, as simple as, if there is a forecasting tool, very simple, nothing very fancy, the forecasting tool that's seen that over the past 11 months that I have a relationship with this bank, I have these 2 or 3 payments that are mostly due in the last 7 days of the month. If it is able to alert me, listen, you are insufficient in terms of funds, these are 3-4 steps that you can take so that you don't fall into a trap, that you don't fall into trouble. That kind of advice, when people start receiving, they'll be able to see and build more trust on these AI-based tools.
How do I know, Sennen, that this advice is just for me compared to this advice has been given to 10 other people? It's just sort of built into the AI.
That's a fantastic question. And that only can happen when it is so undeniably clear that you've already done some work of your own. And now you see, this is an enhancement of what I already had in mind. So if somebody actually says, listen, you pay 27,200 rupees in subscriptions to Claude, Netflix and this, right? And you're short on this. What it will possibly do is, you have another payment to be made, or you're asking for another payment to be made 4 days after, and you'll fall into trouble. What are you going to do? And these are XYZ products that you can use. Now, what that means is, it's already predicted based on what I do. So I have that pattern with me. I understand it. It understands my patterns and my behavior. It understands where I'm falling short. And it's picked up and give me a couple of options and not force those options on me, just to help me. The more people see that there is a genuine sort of effort to help me out in my behavior, right? Like, for example, purposeful debt management, debt reduction. I am in debt. You give me 16 tips, very personalized based on my behavior, how to bring my debt down. That's great for me, that's great for you. Once I understand that, I have built a relationship with you that then I feel you shouldn't be tricking me.
That's really, really good advice. I am just a bit more curious to know that there are so many apps now. And I think I have two questions. It's just how do I, know what app to use or not to use? But more importantly, do you think that these phone apps are going to replace traditional banks? Of course, we've seen just in Pakistan, the rise of digital banks. Are these phone apps going to just sort of, completely take away the need to still walk into a bank eventually, or even talk to a financial agent or talk to an insurance agent? Do you think, what do you see the future,
There's a couple of layers to this. One is, I feel, and the trend also is this way, most of your apps will be banks. So that's a very different way of looking at it. Will a particular building that I have had a relationship with, or a bank that I have a relationship, how will it change? Will it be more digital? Will it have less branches? Will its appearance change? Those are some things to think about. But the other thing to think about is, will Netflix be my bank of the future? Will the Raz.pk be my bank for the future? Because a lot of these banks also, a lot of these companies are also going to be lenders, depositors, whoever is on the back end of things, but they're also going to act like banks. The second is, there is a trend towards digital banks, which means banks without branches. There was a trend for brokerages to have as many branches as possible, so that you would have physical branches. People would trust physical branches a lot more. You would have a relationship manager there. You would go have tea with them, speak to them, because this is about serious money.
Yeah.
But then, how was Robinhood successful? What Robinhood did was, we will not open a single branch. We will take those savings. We will translate that into better services for users. Better services for users, better returns for users, a better quality app for the user. That is where the value is at, right? And once people get comfortable with that concept, it will move more and more towards it. But there's still going to be a large part of the population that is going to find it difficult to take that leap of faith. So completely eliminating the human from this chain of communication is going to be difficult. People want to pick up the phone and call and speak. But when you pick up the call and speak to somebody, you should not have to wait 17 minutes and 43 seconds for my turn.
Yeah.
You have that problem with banking, like,
yes.
I have a problem, I am itching. Now you're telling me I have 17 minutes and 53 seconds to go. Sometimes halfway I keep the phone down, I ask for a call back, that call back doesn't come. At the very least, using technology, using AI, try to solve those problems where people are not frustrated, if not delighted, which is where you should be. Then people, at the very least, the base layer is, they should not be frustrated. And honestly speaking, I don't know why it's taking so long for such large organizations to deliver on such basic promises.
So what's happening in the background? You are a fintech guru.
Yeah.
When I'm using technology, what is it that's going on in the background? How do I know that the advice is personalized and real time, and it's not retrospective or generic?
So how you will know, there's two elements to this. One is how you would actually deliver this. The problem right now in Pakistan, or generally globally now, I've seen this trend happening a lot in the GCC and a lot of, that's how Hisab Kitab is at, right? Our entire thesis is that finance has to be personal, has to be predictive. Without it, the bank is just a vault to me, right? It's just a mode where I come in, I transfer, I send somebody money, I exit. That's not the case. You are best positioned to be somebody who can deliver financial guidance. First item actually, Sajida, is very later on that we think of, what problems or challenges you might run into. The first is, why is the bank with all of its data not even presenting personalized options? I have seen no app in Pakistan that speaks to Sennen. Right? It actually feels like it could be any other person. That number I can own, that number is mine, that balance is mine. There is nothing personalized about this. You know nothing about me. You should know almost everything about me.
Yeah.
Where you pull that data from, I give you permission from. But you know where I go, where I shop, where I spend, what subscriptions I have, who I'm transferring to, all of this information. But this is where it is mind-boggling that raw financial transaction that the bank is sitting on, the financial institutions, why should I only speak about banks?
Yeah.
All of these financial institutions are sitting on has not been converted into intelligence.
Yeah.
That intelligence layer is missing, that engagement layer is missing, that operating system is missing. And that's where I feel this is what Hisab Kitab is. It is that layer that we feel that has been missing, that should sit between the customer and the bank and transform those relationships into something that then is very difficult to get, that's very easy actually to sustain for the long term. Because then you are my close trusted advisor, you are my money coach.
And I think that's very important. You spoke earlier about panic attacks, and I think most of us common people do suffer from that panic attack. And it's a stressful chore for all of us to manage our finances. Do you have any tips of how we can make financial management a little light-hearted, a lot more fun, so that it just becomes something that you look forward to? And I've been avoiding my finances for 3 months because I just don't want to sit down and make my spreadsheets, etc. So what would you?
I'll tell you something very interesting that happened, and I was so delighted to see this. I've never seen this before. I was visiting a prospective sort of client, one of the digital banks in Pakistan, and then they had a leaderboard. They have a staff launch, and they have a leaderboard on their own staff and what transactions they make, and they assigned sort of points to it and a winning cash prize to it and all that. All of that is gamification, right? I'm not asking people to treat finances like games, but I think there's a case to be made to where you could have intelligent gamification, intelligent social intelligence, internal sort of challenges, reward challenges. There's a lot of stuff that's not been explored that, at least in Pakistan, but a lot of other apps are doing it, where there should be a culture of, a healthy culture of promoting financial discipline, promoting savings, of rewarding people for good. We're rewarding people for what? We're actually, if you think about it, we're rewarding people for spending more than they want to.
Yes.
Right now. That's the default.
Yeah.
What we should be saying to them,
you've saved money.
So you've saved money, great job.
Yes.
This will help you.
Yeah.
Here's 200 points that you can use for, I don't know, Liberty books.
Yes.
Or 200 points, if you can accumulate X number of points, you can make use of, you can have a vacation.
Yeah.
You've earned it.
Yeah.
This is what, I don't know whether this is the right way to put it, but I'll give it a try. And not everybody should be given that, but this is how it should be formed. That relationship is almost like parenting, right? This is how, or even if parenting is not the right word, this is how a really good coach would be. If an athlete could use a coach, if you use a coach for a gym, if you're so concerned about the way that you look, you should be concerned about your money in the same way. And that is how you can actually, a positive reward-based sort of structure built around money, I think that would lead to very healthy and very fruitful outcomes.
So what are the options that anyone has when they want to look at these fintechs in Pakistan right now? I won't even go global at the moment.
I would love to shamelessly plug Hisab Kitab, but the application, the B2C application, but you will see in the coming months, as a Pakistani audience at least, some of the banks that we've taken, it's taken us a long, hard while to convince them to have certain engagement tools, certain personalization features inside their applications. And so you will very quickly start to see in 2026 a healthy culture of savings, a healthy culture of personalization, a healthy culture of advice at the right time, being right there at the app that you most commonly use. That's I think that's the best way to start. Rather than saying, listen, install a 7th application that's separate just for this purpose. I want to be present where you're already doing most of your business, and I want to create a layer around it where wherever you make a decision, my guidance pops up. Listen, this is how you can possibly think about this.
Yeah.
And hopefully we should see better outcomes.
So the financial market is highly regulated in Pakistan, and of course we have a lot of challenges. It's not really easy to work in this sector.
Yeah.
Given these challenges, where do you think Pakistan is heading towards, especially in terms of fintech?
So I've always seen Pakistan to be a reactive market, and that's fine. I think as a nation, we are
a reactive nation.
We are a very reactive nation. So there's always a lag. But I do see one thing. When it's undeniable, it's not a case of if it will happen, it's when it will happen. And I think 2026 is going to be that year. It's very clear because if I have to take 32 banks, I know for a fact that once the 3 names that I know are doing it, they come out, it quickly jolts the others into action. If there is no one making the first step, then everybody will remain comfortable. We always prefer comfort. We always prefer the status quo till somebody pops up and say, listen, I did it. And if you look very closely at a couple of banks and what they've been able to do in terms of even AI, just 1 or 2 banks, that's opened up the conversation of, listen, we need to really get into it. So it's really forcing them. Sometimes some of these institutions are in their comfort zones in terms of where they are deploying their funds. Now, when they have to focus on the people, especially young people, and they probably are a little behind, but it's the right time for them to start thinking on this.
For me, this has been really insightful, and I have to use some of the tips that you've given. And I hope that people who are watching this also find some insightful tips in what you've just told us. Thank you so much for joining us in this JBS Stories of Innovation. And I hope to see you soon again.
Thank you so much, Sajida. It has been an absolute pleasure.